Well, thank you everybody for coming to the talk. Before I get started, I think I should introduce myself a little bit. I am Charlie Silver, the CEO of Algebraics Data, a local Austin company full of an incredible group of mathematicians, developers, writers, analysts, and we are very excited to bring cryptocurrency mainstream. Just a little bit from my background. I have been an entrepreneur for 30 years. You may be familiar with one of my companies. It was started in the dot-com era. We started in the mid-90s. Amongst the craziness, just like this ICO cryptocurrency craziness, it was called Real Age. We were a company that collected more personal data than anybody. We created big data before the term big data came out. We collected 300 data points about people's health, wellness, their lifestyle, what they ate, how much sex they had, just about everything. Maybe you're familiar with it. It was all about, people gave us that data because they wanted to know how to make their real age younger. You all know Dr. Oz. He was our spokesperson at the time. That's where he got his media start, and you now all see him on television. But we had 60 million users globally, 40 million in the US. So since then, I've started a publicly traded financial services company called Reality Shares. It has 5 publicly traded ETFs, and actually next week there's going to be a big announcement from that company about a new blockchain product. So keep your eyes out for that. But Algebraics is a company that's been around for 6-7 years. There's already been $40 million invested in it in R&D. And it was all built, it started with this notion that data, regardless of its structure, can be represented algebraically. It's a big idea. And we've spent 6-7 years and $40 million of R&D proving it out, looking for the right business model to go after. And with the blockchain coming on, and we said this is going to change the world, and this is where we're applying our data algebra. So the application that we're building is something called a personal secure vault, where individuals can store their personal data, take back ownership of their data, and if they so choose, they can share it. If they choose to share it, they'll get paid for it. And that's what we're doing. We're creating a new cryptocurrency, the ALX coin, which will monetize people's personal data and bring back ownership to the rightful owner. So having said that, let me give you a little context. I mean, we're all in this thing. Even though we're talking about cryptocurrency, we're in a new economy. It's called the data economy. Businesses, it doesn't matter what business they're in. They live and die by how they use data. Whether it's in the internet, the cloud, artificial intelligence, and particularly on the blockchain. It's all about data. How well you can use it, analyze it, make use of it will make the difference between your success or failure. But the question is, who owns it? Who's the rightful owner? Do you own it? Do you make money off of it? No, you don't. We're going to change that. This the blockchain and cryptocurrency is going to change it all, and we hope to be central to it. So before we talk about mainstream, let's talk about where we are. I've been involved in a lot of industries. Most of them have incredible data about who's participating. Try and find data about cryptocurrency. How many people own it? How many people use it? You won't find good statistics. You'll find analysts with articles, but you won't find good statistics. That alone tells you how early we are in this economy. Think about the internet. You know how many companies are tracking web surfing patterns? How many people are clicking on ads? Market share of advertising. Think about financial services. There are 100 companies producing statistics about who owns what securities, how they're being traded, et cetera, et cetera. In cryptocurrency, that doesn't exist yet. But there are some things we do know. The best thing I can find is that there were 3 million active accounts, even though there are 35 million activated wallets. 3 million active accounts globally out of 7 billion people. 4% of the wallets supposedly own 96% of the Bitcoin. And my guess, it's a smaller percentage than that. We've all heard about the whales. And when there's that kind of lack of distribution, you know we're early. How many people have read the book? It's 30 years old, by Geoffrey Moore. He published it in 1989. Crossing the Chasm. Who's read it? Well, if you haven't read it, I highly recommend it. Everybody in our team, it's a requirement. He identifies this thing called the technology adoption life cycle that is a universal truth. It doesn't matter if it was the printing press, a railroad, automobiles, airplanes, and particularly as it applies to software, microprocessors, high-tech products. It starts in this area in the beginning called the innovators. These are the people that love technology, love to tinker. The more complex, the better. They love new technologies. As it moves along to the early adopters, these people are more intellectuals, more interested in new technologies, not necessarily the tinkerers. But for a company or a product to be successful, they have to cross this thing called the chasm. How do you get from early adopters and the innovators to the majority of people? And that's where the vast majority of companies and products fail. They may attract early adopters, the technologists, the tinkerers, but how to get to the pragmatic majority, falling into this thing called the chasm, is where most companies and products fail. So I highly recommend picking up Geoffrey Moore's Crossing the Chasm if you haven't read it. So the point is where's cryptocurrency on this adoption life cycle? Well, I think we're just maybe past the innovators in the early adopter stage. So the point is, how does cryptocurrency as a product in aggregate cross this chasm? What's it gonna take? Well, I know who's gonna do it and who's not gonna do it. Startups are gonna do it. Just like in the dot-com era, it wasn't Intel, Microsoft, Disney, IBM that brought us the big internet era. It were startups. I mean, Google, Facebook, Amazon, Yahoo, these were startups, even though they're behemoth companies. They were startups in the 90s. Big companies just can't do the innovation. They can't compete with themselves. It requires a startup to do it. So let's talk about, how do startups do it? What are the factors for success? If there was one factor for success that you had to pick, who thinks it's capital? Raise your hand if you think capital is the #1 issue. Nobody? That's surprising. That's usually the first thing. Well, the answer is no. What about management? Do you think that's the #1 factor? Raise your hand. Come on, somebody's got to believe this. Management? No. Not the #1 factor. And by the way, this information has been academically studied and has been borne out. What about technology? Who's got the best technology? Is that what determines a startup success? Raise your hand if you think it's technology. No. Well, okay, so the last one is marketing. Who thinks it's the best marketing company? Well, that's not right either. Okay, there is one factor that is overriding that determines whether a startup will be successful? Any guesses? Timing. It is all about timing, and this has been borne out over and over and over again. You could have the best product with the best management team, with the best funding. If your product isn't at the right time and the market isn't ripe for what you're offering, good luck. You're going to beat your head against the wall. So guess what? All of us that are running startups in this industry, the timing is amazing. Let's talk about the trends. What are the big trends the way I view it? Well, we all know about decentralization. I mean, the best factor, the most ridiculous thing about centralization versus decentralization, I could talk about the Federal Reserve all day long. 7 people sitting around the room pricing the most important commodity in the world, money, centrally planned. People know that this is ridiculous, and this is global. I mean, central banks around the world price commodity, the central planning. I mean, it has given the rise, the failure of central planning, in my view, is what has given cryptocurrency its market. I mean, decentralization is going along in the world. I mean, look at Europe. The EU is, that centralized system is not working. Brexit, in Spain, look at it breaking up. The notion of central planning, even though it still exists, is a well-known failed concept. Distrust of institutions. I mean, they go together. The number one issue about distrust, and I can get booed and hiss, and I'm not making any comments here, but the election of Donald Trump, to me, is the number one reflection of this distrust of institution. Think about what he did. He beat 16 establishment Republicans and then beat the most establishment Democrat. Why? I mean, you know, this guy is a nut, and he beat the most establishment candidates. There is deep distrust amongst the general population of institutions and government as a whole, and this is going around the world. In Europe, I mean, the same kind of candidates are getting elected. People that go and say, you're getting a raw deal, you're getting screwed by the institutions, it's only the crony capitalists that can make use of the system. Obviously, cryptocurrency is another big trend. Everybody every day looks at the headlines and sees how Bitcoin is rising in price. People are going, what's going on? This trend, I mean, governments around the world are accepting it. We don't have to argue about that cryptocurrency is going to have a huge impact. And then another massive trend is this notion of who owns my data? This data exploitation every day. Google, Facebook, the big internet behemoths are being talked about like they're big brother, right? They are big brother. Who knows about the European GDPR? Well, European GDPR is a set of regulations that are coming out next quarter, first quarter of 2018, that basically says companies that use personal data have to disclose every instance of its use, how it's being monetized, and people have the right to know exactly every single instance how their personal data is going to be used. It is going to throw so many industries on its ear. What's he going to do? What is Facebook going to do? What's Mark Zuckerberg going to do? How is he going to handle this European GDPR, by the way, which is going to happen all over the world, these personal data regulations? What's he going to do? Exactly. That's exactly right. That's what he's going to do. I mean, the Facebook business model is going to have huge challenges. I mean, could you imagine Facebook is worth over $500 billion, that market cap? I mean, it blows me away. But that's what he's going to do. So how do we cross the chasm and get to this early majority? How do we bring cryptocurrency to the mainstream, coming full circle back? Well, the first thing you have to do to get to that majority is you have to delight people. You have to get people saying, wow, how is this fun? This is a perfect example. I mean, when Google came out, people were amazed. It was so simple. So easy, and oh my God, it was a gateway to all the global information. This is how you do it, not this. I mean, dealing with a cryptocurrency wallet is very, very difficult. It's not going to get to the mainstream until it is Google-like. Another huge, huge aspect of this is the companies in this space have to focus on a niche. And they have to really succeed as a niche. Who remembers Amazon when they were the Earth's biggest bookstore? You know, that was, I heard Jeff Bezos speak 20 years ago at something called Internet World, where Amazon was a bookstore, but he was out there saying, no, we are Walmart. We're going after Walmart. We're going to sell we're going to sell every product that Walmart sells, and we're going to beat them. We're going to cut their prices, and we're going to delight customers. Why do I have a picture of the Marines? You got to take the beach before you take the continent. That's a picture of Normandy. People who think they're going to boil the ocean are not going to succeed as a startup. You have to focus on a very narrow niche to succeed and then grow from there. And maybe the most important thing is you got to create this viral ecosystem. Going back to the crossing the chasm curve, you can't ignore the innovators and the technologists as you move along that curve. You've got to create word of mouth, and you've got to appeal to those innovators. It's like the innovators passing the baton to the early majority. You've got to get word of mouth. So, having said all of this, I want to talk about Algebraics. We have been a deep technology company working on this mathematics of data. We think we're gonna make the blockchain scale. But what's most important is this individual consumer application that we're creating. This ability for individuals to take back ownership of their data. What does ownership mean? Ownership means the ability to monetize it, to make money off of it. But that's huge. Advertising is a $600 billion global industry, $600 billion market. We're going to boil the ocean? No. We're going to focus on a niche. We're going to focus on a niche that's going to delight consumers. We're focusing first on entertainment. You download our application on your mobile phone, and you are going to get delighted. You're going to get paid this new ALX currency to watch a movie trailer, to watch a television trailer, to play a video game. And your little wallet is going to go cha-ching. You're going to have 100 new ALX coin in there. We're going to focus on entertainment. We're going to be the #1 way for entertainment companies to build word of mouth. Once we do that, once we get to tens of millions of users, and that's what it's going to take, tens of millions, we're going to open up the platform where individuals can store more and more of their personal data, choose to share it, and then other advertisers will come on the platform and bid for your attention. They're going to pay you directly. Who read a book 20 years ago called Permission Marketing? Seth Godin. Anybody know that book? It was really one of the foundational books of the internet. Well, this is pure permission marketing, where advertisers say, do I have permission to talk to you? And I'm going to pay you. Instead of paying Facebook, they're going to pay you directly. So Algebraics is full of a lot of has $40 million invested to date of very high net worth people. We are bending over backwards to comply with regulatory issues. We've hired, Marco Santori's been our lawyer, everybody knows him. We have been an early SAFT proponent, and we just opened up a SAFT. We see our ICO is a 4 or 5 month process, and we are launching our application to the public and our coin at South by Southwest in March. So it's going to be a very slow march to that. You can go to saftlaunch.com if anybody's interested in participating in the SAFT. SAFT Launch, SAFTLAUNCH. And we're up there right next to our friends at T0. SAFT Launch is being run by a company called RenGen. They're the world's biggest market maker in cryptocurrency. We're also a customer of Argon Group, which in our view is the leading investment banker in cryptocurrency. So, love for you to participate in all kinds of ways, whether as an investor or as a download the application. We're going to need early users and testers, and we're going into alpha in about 30 days. So, love to get your feedback. Thank you very much.
We have
awesome presentation, by the way. My question is the personal data, the person attached to that. Now, when I choose to sell my personal data, am I selling my identity behind it, where that data came from, who it belongs to, or was there a bot that created all this analytics?
No, we're going to have zero knowledge. I mean, your identity is going to be unknown to anybody, totally unknown.
one more question.
Can you give a brief example of how you algebraically explain a piece of data?
We have a book. There's a book. It's welcome to anybody who wants it. It's free on our website as well. Robin Bloor, who's going to be on the next a PhD in mathematics, is one of the authors. He's the guy to talk to.
Charles, thanks very much. Appreciate that.
Thank you.